Hi everyone, welcome to another video by Optionables. My name is Saket and today in this video we are going to review what happened to the markets today, what we can expect from the markets tomorrow, as well as what happened to our intraday trades. Starting off with what exactly happened to the markets. It was a one big day of consolidation where the market consolidated between 17,100 and 200. So throughout the day the market traded between that range up until 3 o'clock. So post 3 o'clock there was some severe selling which came in the market. All the way from 17,150 it fell down close to 17,050. So overall the day was extremely flat up till the end. So if you actually remove the last half an hour move, so there was nothing much. The market was consolidating in the range of 17,150 itself. The VIX came down by close to 8%. That means there is slightly reduction in the uncertainty around. So before which we have to understand what actually made the VIX come down. Russia has actually gone on to attack Ukraine, and the troops of Russia are already inside Ukraine, and Russia has also told that they want two separate nations or two separate territories within the Ukrainian territory because they are pro-Russian. So then in spite of all this, why exactly is the uncertainty down? So the answer to this is pretty simple. Yesterday, if we see Joe Biden's speech, so he made it clear that US is not actually looking for war, and he also made it pretty clear that US will never be aggressive. So US has no intention to be aggressive. They will only be defensive, and they will also help to defend the NATO territory. So this is a pretty positive news because this technically shows that US is not interested in the war and they are more looking for peace. So what the market really feared was, even if US starts to show aggression, then this can go on to become a bigger war. With that uncertainty out of the way, the markets actually found it little positive. US also started to recover post the speech, and even our markets today gapped up by almost 100-150 points. So the thing is, even though this was a positive news, the VIX has not completely cooled down. Yesterday it was up by close to 16%, so today it has only gone down by 8% because the fear of war getting bigger still remains. So Russia has not actually completely pulled out its troops. The troops are still there. If the aggression increases, then the situation can get much worse, and the markets can also remain quite volatile. So with that all being said, we will see what exactly happened to the markets today. So when you look at the overall picture, the DIIs as well as FIIs bought and sold almost the equal figure, so around 3,100 to 3,200 crores. So when we look at the overall market breadth, so Nifty almost ended just around 20 points lower, that is absolutely flat. And if you see the top gainers as well as losers, we have from all the sectors. So the thing is, there was no particular sector which actually outperformed or underperformed. There are stocks which ended up gaining as well as losing from each of the sectors. Now if you look at the overall market breadth also, so the overall market breadth today was quite positive. Even though Nifty ended negative 20 points, if you look at the total 1,800 odd stocks which actively trades in NSE, around 1,300 ended up gaining, whereas just around 500 stocks ended up in red. So overall market breadth was also positive. Before moving on, I would also like to tell you about an interesting offer. So the broker with whom we trade, Firstock, is giving 100 orders free to whoever is opening an account using the link in the description below. So if you're interested, do check it out, and we would highly recommend it for the simple reason being they let you trade in out of money options, and the order slicing is pretty simple. So for example, so let's say I want to place 5,000 quantity in Nifty. So I can't place this in one shot because it comes with a freeze quantity. So this freeze quantity is something which is set by the exchange. For Nifty it is 1,800. That means the maximum quantity which I can shoot in one particular order is just around 1,800. But with Firstock, when you are trying to execute quickly, you have this option where you can slice the order. When you say 5,000 quantity, Firstock will automatically slice it into 1,800, 1,800 and 1,400 with a single click. So this way order execution also becomes easy. So you can also definitely try it out, since anyways you will be having 100 orders free. So that will bring us to the next thing, that is what exactly we can expect from the market. So tomorrow is expiry day, and since there are so many things going on, we can expect the expiry to be pretty much volatile. because tomorrow also marks the end of the monthly expiry. So it's not just weekly, it's also monthly. So a lot of future contracts will also be rolled over. So even that will be quite an important data to see whether people are going more long or short in the March future contract. So now if you look at the overall open interest scenario, there are certainly more number of calls when compared to puts. And the moment we have more number of calls, it is a sign of bearishness, because more people are selling call options means that they are pretty bearish on the market. If you look at the overall picture of technicals as well as open interest, we certainly find 17,000 to be a very strong support, at least for tomorrow's expiry, and also 17,200 likely to act as a very strong resistance. But the thing is, for the current level of volatility, this range is extremely short. 17,000 to 17,200 is hardly a 200-point range, and Nifty will quite easily cross this range. So now talking about a broader range, what we can actually expect this expiry will certainly be 16,900 to 17,300. So this is the broader range what I am expecting the markets to trade between, unless there is another news breakout which actually sends up the market moving in any particular direction. So now we will quickly discuss what exactly happened to our trade. So to be honest, today's trade was extremely simple. So we just simply did a 17,150 short straddle in the morning, and throughout the day the market traded in a very small range, and the quantity was not high. So that's the reason we made around 1.6, 1.8 lakh profit. But towards the end, when the market started falling, our profits also started coming down, and overall we exited with a profit of 1.5 lakh. So that is for the overall trade. We just ended with 1.5 lakh. So I'll be attaching a screenshot of the entire thing at the end of this video, because there is nothing much to be explained in the video as well, because it was simple short straddle which was held till the end. With this, we also come to the end of this video. This was a short video, and if you have liked it, please do hit the like button, share this video, and subscribe to Optionables. And meanwhile, also do let us know in the comment section if you have liked the video and how did your trade go. Thank you so much for joining.